Hi, everybody. Welcome to this episode of our High Five interviews. Today I'm speaking with Hayley.
Hello.
All right, Hayley?
Yes, good, thank you. You?
Yeah, very good, very good. Today we wanted to talk about what is the right amount of data in dentistry. So Hayley will kind of go into more detail, but there's a kind of big spectrum of how people report in dentistry financially, and there isn't an industry norm. And what we wanted to do is kind of strip back what we think the right amount of data is. And it will vary from business to business because it actually has to kind of marry with where your strategy is, what your focus is. So there's not a generic answer, but we thought if we took a bit of time to have a conversation about it, hopefully it'd be useful for you guys. And obviously, if there's any questions at the end, give us a call and we can discuss in more detail how it might apply to you. So, Hayley, probably as a kind of place to kick off, what does financial reporting look like in dentistry?
Yeah, as you kind of touched upon, really does vary. So for some clients, kind of financial reporting is kind of their set of accounts. That's as far as they go. So they might run their business via cash in the bank, so they know they've got kind of a buffer, and if it's a bit higher, it's been good. If it's a bit lower, it's been bad. But obviously, they're kind of running it pretty blind. But then at the other end of the spectrum, we have seen some clients that keep a lot of internal data. So it could be any number of kind of sale metrics, kind of new patient calls, average daily yields, kind of what the best treatment is, kind of high treatment values. And there are other providers kind of in the industry, and we've kind of seen their reporting, which is very in depth. But I guess the only kind of warning for that is you do kind of get drowned in data sometimes. So yeah, you've got two ends of the spectrum, but kind of none are actually effective, in my opinion. But there isn't really an industry norm. It does vary business per business and client by client.
I think my experience of it, so I'm sure everyone knows I'm not an accountant, so looking at a spreadsheet for me can be quite dry. And it doesn't necessarily tell me anything unless I know the business very well already. So I think there's a kind of chronic disconnection of data to the actual strategy of a business, to the story of a business, to the purpose of a business. So it just becomes a quite impressive spreadsheet.
Yeah.
I know you guys love formulas and all of that stuff, but it's not actually allowing me to drive the business forward. So I know you guys put a lot of work into actually making the data meaningful and actionable. Do you kind of look at everyone on an individual basis and kind of approach it that way? What's the process?
We have done, and I would just say also that I am an accountant, and sometimes I get kind of overwhelmed by stats as well. So we've kind of been on a journey, kind of over the last 8 years that has been Hive, that our kind of management reporting, we call it, which is your kind of your financial reporting, has evolved. So obviously, unlike a set of accounts as a standard format, but we've been working with clients, and kind of in the past had kind of adapted each kind of report or quarterly kind of interaction to that client. But what we found is that actually, from dental practice to dental practice, there is a kind of standard format that works really well with people. And that is for us to step away from the spreadsheets, basically. So we basically reformatted the income and all the cost basis of any dental practice into a visual, so a pie chart that allows us to assess different segments which represent kind of different cost bases, which kind of in turn tells us the business model. So no pie chart will look the same, but what it does is it really simplifies all those figures, gets something that we both can look at, and just sparks a conversation, really. So we have kind of simple reporting. We're not overwhelming with loads of data. We're kind of taking all the complexity out of that, representing it in a format so we can have good interaction, basically, with our clients.
Yeah, I definitely find, well, we've all been in thousands of meetings where there's not really any kind of connection and you're not really sure what it's about. And I think that kind of reporting often works that way, that it looks like a lot of effort's gone into it, and it probably has. And often that data will be pretty robust as well. But unless it's kind of connecting with the person you're interacting, it kind of doesn't mean anything. So it may sound incredibly simple to put things in a pie chart, but in fact, it's quite revolutionary. I've seen it with hundreds of clients over the years, that when we actually show them what their business model looks like in a visual way, they really actually understand what we're talking about when we're talking about profitability and different benchmarking. So it's it's just something that no one else seems to do. So it's really useful for me as well as a non-accountant to be able to see things in kind of black and white terms like that.
Yeah, I think.
Sorry, go on, Hayley.
It kind of takes the value that we can add is kind of more it's in that meeting, it's in the conversation. So to give an example, we would have kind of the pie chart, we kind of run through the different segments, and every dentist kind of wants to know kind of where they sit and what the benchmark is. So there are kind of certain parameters. So for instance, we like to see wages as a kind of a maximum of 18% of turnover. So if there's a bigger segment than that, well, we step in is to kind of say, here's the figures, it's bigger. Actually, what that could mean, there could be kind of two different reasons for that. So it could be that actually on the ground, you're still feeling really stretched, which would indicate you kind of got inefficiencies in the team structure, too many staff members ineffective. Or it could mean that actually we know we're over-resourced because we want to get to the next level. We want to get to add another kind of 200k onto turnover. And that conversation then kind of sets the practice owner up for the next kind of quarter, because I can set some parameters then. Okay, I can accept that your wage bill's 19%, but you have to make sure your revenue for the next 3 quarters is X amount. So it enables a good, healthy conversation, but they can take away some actionables. It's not just kind of going, oh, it's 18%. I know my staff feels 18%. They know what that means, and they know how to kind of make a positive out of it, basically, and grow and develop the business.
Yeah, it's a cornerstone of any kind of good strategic conversation. I often think, classic New Year's resolution type things, people that fail at it often kind of commit themselves to too much. So they say, I'm going to do intermittent fasting, I'm going to go running every morning, I'm going to go to the gym every evening, and I'm going to do all this stuff. And kind of
every January.
yeah, that's it. Well, that's why I know it so well. is when you overcommit to these things, and there's too many kind of priorities, which clearly aren't priorities, because if they were, you'd do them. No strategic progress is made. So what it's nice for me in my consulting role, if I've said, okay, so it is your wages at 20% now, but we've agreed the kind of level of investment you've gone to means that actually in 3 months' time, your monthly turnover should be 250 grand, which will actually put it at 13%. I can hold them to that. So they've got a very kind of razor focus on it, and that kind of extrapolates out that the ADYs will actually need to be above 2 grand every day, the average daily yields, that is. So it's the right way round with data. Often I see data that's kind of disconnected. It's correct, possibly, but it's not connected with anything real in the business. Whereas we're starting with a strategy, which, one key part of any strategy is having a profitable organization. And it allows us to kind of move in the right way through the data and then drill down. So if we see we haven't hit $250,000 that month, we can drill down into the ADYs and say, why did that happen? Actually, we don't manage our holidays very well, for example, these different things. And it means that we're still spending too much on wages, but we've got reasons for it. And hopefully we can affect change so it doesn't happen in the next quarter. And it's that kind of spark between data and action that I don't really see in the industry. Hayley, I wanted to ask, because I've kind of got a slightly different agenda when I'm working with a client. It's like I have a hierarchy in the information that I want. So the first thing I really want to know after revenue generally is ADYs, so the average daily yields of each associate in the practice. And then I do want to know new patient data and their kind of new journey. But I know I won't be able to get, for example, the average new patient value probably for the first year of working with someone, because it takes a while to kind of have the habit of collecting data in a practice. Yeah. What's the hierarchy in the financial structure?
I think the first step is just to get kind of real-time information. So that it sounds, everyone kind of says it, and we say it a lot, real time. What does it actually mean? But it basically just means getting into the habit of getting Xero up to date, because that is we can't do anything without that data, basically. And if it's done, there's a 6 month lag on it, it's pretty useless to us if we're trying to navigate through the next quarter. So yeah, the hierarchy is getting that in place, and acknowledge if it's not a priority for you and you don't have the time to do it. We can kind of keep it up to date for you. Sometimes there's someone else in the practice that can do it. But that's absolutely number one. That's key. And I think step two is making sure that you're looking at data at the right times. So some kind of people want to look at it weekly, monthly, but that's great for some kind of metrics. But actually, when it comes particularly to continue your business model and your strategy, kind of quarterly is enough. You need to allow time to build trail trends and analyze what's happened, rather than just reacting. Oh, that's gone down this month, it's fine, or it's gone up, we need to do something. Actually, leave it run a quarter, and then you can compare to the previous quarter. In dentistry, there's lots of seasonality, isn't there? Kind of August and December are lower, those sorts of things. So you can kind of compare quarter with the same quarter last year to kind of get some more meaningful data. So yeah, number one is making sure you have the data, and number two is making sure you're looking at the right things at the right time.
How much is the reason? So, it's been a particular annoyance of me over the years that often people's Xeros aren't up to date to actually give any meaningful data. So I know you've put over the past few years some kind of significant measures in place to actually resource so we can support our clients better to have that up to date. I know that a normal accountancy firm, that's not really their agenda, because what you're buying from them as a consumer is compliance, I suppose. Like, so you've got a stamp saying that's okay, HMRC are going to be cool with it. Whereas with us, we are trying to kind of put ourselves forwards as being that proactive, real-time accountancy firm. So what does that actually mean in terms of how you've structured the team to be on top of Xero or whatever bookkeeping software?
It basically means that we have recruited team members and put a lot of resource into being there to support clients kind of to get their Xero up to date. So a lot of accountants, as we kind of said, are retrospective. So the deadline to kind of get things done is kind of whole period of time kind of after. So you pretty much if you've got your year end of 31st of March, you don't really have to submit anything for kind of nine months after. So there's no kind of urgency to get the Xero up to date, whereas we want to be on hand. So if you're a month behind, we've got people here to help do the training with you, to help you show you how to use Xero effectively and to reduce the time it takes you to do it, or to process the data for you. So that we want it bang up to date, really, so that if you need a mortgage, we've got your figures up to date. If you want to do tax planning, we know exactly what your profits are at the moment. We've talked a lot about how the tax arena has changed, and you can't backdate anything anymore. So if it comes to the 5th of April and you've not done anything, you've missed the boat and you've lost tax for that year. So we want to be on the ball at all times. So we kind of have a whole kind of mini department within Hive, which is structured basically to help clients have up-to-date Xero, whether it's us doing it for them or us supporting them in doing that training and development.
Yeah, and there's been a slight shift in mindset as well, that I think a lot of clients would have every best intention of doing their bookkeeping and staying on top of it. Problem is, they run really busy businesses, and it would get to the end of the year and either we'd have to do a whole load of work to catch up, or there'd be something, and basically we haven't got the most effective experience. So I kind of hope, and I can see that we're much better at diving in earlier and actually saying, just use us, or just recruit someone, because we know the same thing's going to happen again.
Yeah, and I think if kind of look at the cost benefit, though, we could save tens of thousands in tax each year just from kind of having that information to hand at a point in time, so you can take some action. So though it might be kind of an additional kind of monthly cost for us to just take that off your hands and do it, that will pay back kind of tenfold just in year one through tax savings alone. let alone if you've got anything else going on. If you want to move house, you need a mortgage, you can't really put a price on kind of being able to get a mortgage in place in time for that house that you want. Or particularly if you're looking to sell in a certain amount of years' time, it's really important you've got tip-top financial data so that any potential buyer, there's nowhere for them to kind of try and knock you down on price or I don't know, nooks for them to get into. You've got robust data and you can get the asking price that you deserve.
Brilliant. Well, I think we should leave it there, Hayley. We've kind of gone through some of the benefits. What are the next steps if someone wants to learn some more? Just to drop you an email or
yeah, just to get in touch. I mean, we've got different ways that we work with clients to kind of help them get their data, whether it's kind of just taking the whole problem off them and doing it for them, or we've got, as I said, a team that can help with training and Xero. If it's used right, there's lots of kind of tips and tricks that save a lot of time, and we're happy to share that with clients as well. So just get in touch, and there will definitely be a way that we can help.
Brilliant. Thanks very much.
Thanks, Dan.